Hey everyone, and welcome back. We're diving into something pretty major today. The Bank of Canada just announced another interest rate cut.
Their fifth in a row.
Exactly, 5 cuts in a row. It's definitely got people talking, especially about what it means for things like real estate.
And mortgages, of course.
For sure. So to get the full picture, we've got the Bank of Canada's announcement right here, and we've also tapped some local experts.
Real estate and mortgage pros, right here in London, Ontario.
Yep, they're giving us the inside scoops. So let's jump right in. This rate cut, it's not just a tiny tweak, right?
No, not at all. They actually took a full 0.5% off this time. So that brings us down to 3.25%.
3.25%. Okay. But before we get too deep into the impact, remind me, why are they doing this again? It's all tied to how our economy is performing, isn't it?
Exactly. Remember how we saw that decent 1% growth in the third quarter of this year? Well, the forecasts for the fourth quarter not looking quite as optimistic.
I see. So they're cutting rates to try and give things a bit of a boost.
Yeah, exactly. The idea is if they made borrowing cheaper, people and businesses will be more likely to spend, and that should help stimulate the economy.
Okay, that makes sense. Now, let's talk about what everyone's really curious about, how this affects real estate. We got in touch with Bill Matter, the CEO of the London St. Thomas Association of Realtors. He had some pretty interesting things to say. Here's a quote from him. It's not a huge difference financially, but it's more, I think, the perception and the understanding that it is going to go to a reasonable, a better level. And we're anticipating a really good impact on the market in the new year. Slow and steady, that's a much better way for a real estate market to go.
Interesting. What do you think he means by that perception and understanding bit?
Well, I think he's getting at the psychology of it all. Even if a 0.25% change doesn't sound massive on paper, it sends a signal. Buyers see rates moving down, and maybe they feel more confident about jumping into the market.
Oh, I see what you mean. So even a small change can have a big psychological impact. It's almost like a vote of confidence for buyers, making them feel more secure about investing in real estate.
Exactly. I know even when I was refinancing my mortgage a while back, even a tiny rate difference changed my monthly payments. It definitely made me think twice.
Oh, absolutely. Those small changes can really add up when you're talking about a mortgage. They can impact what you can afford monthly and the overall price range you can even consider.
Absolutely. And speaking of mortgages, we also talked to Mike Haddam, a mortgage broker here in London. He gave us some great insights into how this rate cut might actually shake things up for people who are already homeowners or those thinking of buying.
Right. People probably wondering what this means for their wallets.
Yeah, he said. It's going to be a big impact on two fronts. I mean, people that are currently carrying a variable rate mortgage where the payments will fluctuate with the rate, they're going to see a pretty good discount on what they're paying now, which is probably going to alleviate some pressure on them. A lot of people, they're fearful of getting into the market with home prices being almost 3 times what they were 10 years ago. I think that now they're going to feel a little bit more comfort in getting into the market, and I think this is a positive. So he's basically saying there are two main groups this is really going to affect.
Makes sense. He mentioned people who already have variable rate mortgages. They're the ones who'll see their monthly payments drop, which is
Yeah.
good news for them.
Right. Less pressure on their monthly budget.
Exactly. And then there's that other group you talked about, potential home buyers who have been a bit hesitant to dive into the market. Maybe those sky-high home prices have been holding them back. This rate cut could be the nudge they needed to take the plunge.
Yeah. Yeah, it's almost like this rate cut is opening doors for some while giving others a little breathing room. But here's the thing, if more potential buyers enter the market, wouldn't that increase demand and possibly push prices up even higher?
Now, that is a great point. And that's exactly what we'll be digging into next. That's the big question, isn't it? Will this rate cut actually make homes more affordable, or will it just fuel more price increases?
It's like a catch-22 almost.
Yeah, it's a complex situation with a lot of moving parts. But you're right, increased demand can definitely lead to higher prices. That's basic economics. So while lower rates might seem like a dream come true for some buyers, they could end up facing a whole new set of challenges.
So it's not a guaranteed win for everyone, not as straightforward as it might seem at first glance.
Exactly. It's not a simple equation. There are so many factors at play. And that's why it's so crucial for both buyers and sellers to really understand the potential ripple effects of this rate cut.
So besides the possibility of those higher prices, what other things should people be considering?
Well, one interesting angle to think about is the impact on new development. Lower interest rates could actually encourage more development projects.
How so?
Think about it. If developers can borrow money at lower rates, It makes those new projects more financially attractive. They might be more likely to break ground on new homes and condos, and that could eventually lead to increased housing supply.
Ah, I see. So more supply could potentially help to moderate those price increases down the line.
Precisely. It's a long-term perspective, but it's a factor worth considering. Of course, there's no guarantee that will happen, but it's a possibility.
It's like a balancing act in a way. More buyers could push prices up, but more development could bring them back down. It's fascinating to think about all the different ways this could play out.
Absolutely. It's a dynamic situation. There's no crystal ball, no easy answers, and that's why it's more important than ever to stay informed, do your research, and maybe even talk to some experts.
Get some professional advice.
Exactly. Someone who really understands the nuances of your local market. Because, what's happening here in London might be totally different from what's happening in, say, Toronto or Vancouver.
Great point. Okay, let's bring it back to London then. We've talked a lot about how these rate cuts could affect potential buyers, but what about the folks who already own homes here? Is this a good time to think about refinancing?
That's the million-dollar question a lot of homeowners are probably asking themselves right now. And honestly, the answer is, it depends.
It depends.
It does. Refinancing can be a really smart move to take advantage of those lower interest rates. You might be able to lower your monthly payments or maybe even shorten the term of your mortgage and pay it off faster. But it's not a decision to be made lightly.
What do you mean?
Well, there are costs involved in refinancing. Fees, closing costs, all that. You really need to weigh those costs against the potential savings you might see with a lower interest rate. It's all about crunching the numbers and seeing if it truly makes sense for your individual circumstances.
So you're saying it's not as simple as just jumping on the bandwagon because rates are lower. You really need to do your homework and see if it's the right move for you.
Exactly. Don't just react. Think it through.
Yeah.
And you know what? A good financial advisor or mortgage broker can be a real asset in this situation. They can help you analyze your options and make sure you're making the best decision for your specific needs.
That's such good advice. I think that's a key takeaway for everyone listening. Don't just react to headlines. Take the time to understand how these changes might affect you personally. Make those decisions based on your own goals and your own circumstances.
Couldn't have said it better myself. Knowledge is power, especially in the world of real estate and finance. It's so easy to get swept up in the hype. But taking a step back, doing your research, that can make all the difference.
Absolutely. Speaking of knowledge, let's do a quick recap of what we've covered today. We started off talking about the Bank of Canada's decision to cut interest rates for the 5th time in a row. A pretty bold move, as we've discussed. And the goal, stimulating the economy by making it easier for people to borrow money.
And from there, we explored how this rate cut could impact the real estate market. We looked at both sides of the coin, the potential benefits for homebuyers and the potential challenges they might face. We also touched on the impact on homeowners and the possibility of refinancing.
Right, and I think one of the most important points we've highlighted is that this isn't a one-size-fits-all situation. The impact of these rate cuts will vary depending on individual circumstances and local market conditions.
Absolutely. And at the end of the day, it's up to each individual to decide how they want to navigate this new terrain, to weigh the potential benefits against the potential risks, and to make informed decisions that align with their own goals and aspirations.
Well said. Now, I want to bring this back to you, our listener. What does all this information mean for you? What are you thinking? Are you considering buying a home in the near future? Or maybe you're already a homeowner and you're thinking about refinancing. What's on your mind?
Yeah, it's a lot to process, isn't it? So many things to consider.
It really is. But that's what makes it so important to take a step back and think about what this all means for you personally. What are your goals? Your priorities? Are you hoping to buy a home someday? Maybe upgrade your current one? Or are you more focused on managing your existing mortgage and making sure your finances are in order?
Right. It's all about figuring out your own path. No one-size-fits-all answer.
Exactly. And even if you're not planning to buy a home or refinance anytime soon, I still think there's a lot to learn from all this. Understanding how interest rates work, how they affect the economy, that's valuable knowledge for anyone.
Definitely. It helps us make smarter decisions about our money, our investments, even our careers. Absolutely. It all connects in some way. It's interesting. We've talked a lot about the potential impact of these rate cuts on the housing market, on individual borrowers. But what about the bigger picture? The broader economic implications? How will these lower rates affect businesses, inflation? What about overall economic growth? Those are questions that'll continue to unfold in the coming months and years.
And that's a great point. It makes you realize this is just one piece of a much larger puzzle. And even though we're wrapping up this deep dive, the conversation doesn't stop here. It's important to stay curious, keep learning, keep asking questions.
Couldn't agree more. The world of economics and finance, it's constantly evolving. There's always something new to discover.
Well said. And on that note, I want to thank you, our listener, for joining us on this journey. We hope this deep dive into the Bank of Canada's interest rate cuts has been insightful, maybe even a little bit inspiring.
It's been a pleasure diving deep with you.
And until next time, remember to stay curious and keep diving deep.